Welcome back. This is episode 191. I'm back from a brief vacation with my family in the Dominican Republic. This is my fourth time going there. I absolutely love it. It's a wonderful country with friendly people, great food, and amazing weather. If you've never been, I recommend that you check it out. This week I want to talk about some changes that went into effect beginning this year for 529 plans, which are now allowing for tax-free and penalty-free rollovers from a 529 plan to a Roth IRA. But before we get into that, as a reminder, if you're serious about getting a plan in place for your retirement, then consider signing up for my online, either in-person or online retirement planning course, Retirement Readiness Review. If you live in Connecticut, consider attending one of my in-person retirement planning workshops that are starting this month. In March. Or if you live outside of Connecticut, consider taking my on-demand course. To learn more, head over to retirewithryan.com and click on courses. So on December 23rd, 2022, Congress passed what is known as the Secure Act 2.0, and I've talked about this in my podcast a number of times. This Secure Act 2.0 made a lot of changes, like increasing the RMD age to age 73. And another change that was made, which hasn't gotten a lot of press until lately, was allowing for rollovers from a 529 plan to a Roth IRA, both tax and penalty free. This became effective on January 1st of this year, 2024. Prior to this, if you wanted to take what's known as a non-qualified withdrawal from a 529 plan, meaning using the money for non-approved school use or school expenses, the gain on that withdrawal was subject to income tax and a 10% penalty. You never pay tax on your contributions. In this case, it's just the gains. And I would argue that even that is not terrible because it would be similar to taking a withdrawal from a IRA. You would still have the additional 10% penalty by taking this distribution, but you would have had hopefully years of benefiting of tax-free or tax-deferred growth on that money. However, now some of that money, if you have unused money in a 529 plan, can be rolled over to a Roth IRA for the beneficiary of that 529 plan, both tax and penalty free. And you have the added benefit to the beneficiary of getting tax-deferred growth and tax-free distributions from the Roth IRA when they take that money out down the road. So how much can you roll over? Well, there's a $35,000 lifetime limit per beneficiary. However, you can't roll it all at once. Wouldn't that be nice if you could roll over the whole $35,000? Instead, you're subject to the annual Roth IRA contribution limits that apply for 2024 and beyond. Meaning this year, someone under 50 can roll over $7,000 to a Roth IRA. If that beneficiary happens to be over 50, then they can roll over $8,000. Keeping in mind that this takes into account any other Roth contributions that beneficiary has made for that tax year. So let's just say, for example, your child had already contributed $3,000 to their Roth IRA. You find out about this and you want to roll over $4,000 for them for this year. $7,000. I jumped ahead there. You'd only be able to roll over $4,000 for this year. You may be wondering, how can the beneficiary of a 529 plan be over 50? Well, they can. There is no law saying that you can't be the beneficiary of a 529 plan if you're over a certain age, or any law saying you can't make yourself the beneficiary of your own 529 plan. I'll come back to that later. So what are the rules that apply? Well, the first rule is that the 529 account needs to be 15 years old or older, meaning you've had to have that account open for 15 years, and this is not just the child. The Roth IRA you're rolling the money into needs to be the same name as the beneficiary on the 529 plan, meaning if you're the beneficiary, you can't roll the money to your child if they're not the beneficiary. The rollover must be what's known as a direct rollover, meaning the 529 company will make a check payable to the Roth IRA company. You can't take receipt of the money. Meaning, if you took a distribution earlier this year and now you decide you want to roll that money over, you're not able to do that. Or if your 529 plan is at the same place where your Roth IRA is, the company will most likely just make an internal transfer. They won't be sending checks through the mail, which will make it even easier. Next, contributions and earnings on those contributions made in the last 5 years can't be converted. The 529 beneficiary will need to have earned income equal to the amount of money you're rolling over, meaning your beneficiary will have to make at least equal to the amount you're going to roll over. So if your beneficiary is still in high school and they don't have a job, then you can't do a rollover for them just yet. They would need to have earned income in the year of the rollover equal at least to the rollover. So just think of it as income of at least $7,000 to do the maximum. However, one nice thing is that there is no Roth IRA adjusted gross income earnings limit. So you may or may not be aware, but there is a limit to how much your adjusted gross income can be in any tax year to be eligible to make a Roth IRA contribution. That does not apply here. Next, when should you start your rollovers? Well, as I said earlier, technically they started this year. However, there are some things to consider before you start doing a rollover. This is not as straightforward as it sounds, and there are a number of gray areas that have come up that you should be aware of before you process one of these rollovers. So what are some of the gray areas? Well, one is, what if the 529 account has been open for 15 years, but you changed beneficiaries during that time? What if your beneficiary originally was your son and now it's your daughter? Does the current beneficiary qualify for the rollover? What about your son? Does he qualify because he was once a beneficiary of the account? What if you changed 529 companies during that time, meaning you started with Vanguard and then you moved your 529 account to Fidelity? Does this still qualify provided that you had the original account open 15 years ago? Can you process a rollover for one beneficiary, and then once you complete their rollover, once you hit the maximum of $35,000, can you then change the beneficiary to someone else, like another child, maybe even yourself, and then roll over $35,000 for that individual? How does your state treat the rollover of this money? Is it going to be tax-free as it is on the federal level, or will your state impose tax on this rollover? Many states do tax these types of distributions. Others don't, and some haven't released clarification on this. Who is tracking the gains from contributions made in the last 5 years to make sure those aren't being rolled over? So there are a number of questions that have come up with this, and unfortunately the IRS will need to clarify many of these gray areas. Many had hoped that they would do that when they released what's known as Publication 970 earlier this year, but they didn't, so we'll have to wait a little while. So next, can you process a rollover with every 529 provider? Well, it's hard to answer that because there are hundreds of 529 providers out there, and even in the same state, there could be 4 or 5 different 529 providers within your home state. So you really need to reach out to wherever your 529 plan is to find out if they have set up the procedures to be able to do that. Being that I'm located in Connecticut, it's where I have my children's 529 plan money, what's known as the CHET plan, the Connecticut 529 plan, or one of the two is the CHET plan, the Connecticut Higher Education Trust. So I reached out to Fidelity, who administers this plan, and spent a little bit of time on the phone with them. And from what they told me, they are ready to process these rollovers and have the paperwork set up to do that. And the person who I talked to on the phone also seemed quite knowledgeable about doing this. So how can you process a 529 rollover with the CHET 529 plan? Well, I'll put a link in the show notes to the form. There's a distribution form. And if you go to retirewithryan.com/podcast/episode 191, you can get a link to that form. So it's pretty straightforward. You would just fill out the form checking 529 to Roth IRA transfer, and then complete the remaining information. If you were moving it within Fidelity, there would be one set of instructions you'd put, or if you're moving it outside of Fidelity, there would be a separate set of instructions with whoever your new IRA custodian is, or if you already have a Roth IRA open. You could keep it with Fidelity. If you like Fidelity, you can just open a Roth IRA there or have the beneficiary do that. That would be easiest because then the money never leaves Fidelity. But it's not a big deal if they have to send a check to your new IRA custodian or your current Roth IRA custodian. One big thing to remember is that anytime you're doing one of these contributions to a Roth IRA is that make sure you go back in and invest the money. I often see clients where I've told them, hey, go into your Roth IRA with such and such company and make sure you make a contribution. And then we take a look at the account a year later and the money's still sitting in money market. They have forgotten the next step, which is you have to invest the money. It's not a 401k where every dollar that hits automatically is getting invested. It's an investment account. So you actually have to go in there and choose where the money's going. So whether that's a mutual fund or an ETF or a stock, make sure that you follow up, set a reminder for yourself, maybe in your phone for a couple days later after the money's hit or a week later, and go in and invest the money. So lastly, now that you know that you can make a rollover, should you make one, right now, shortly after listening to this episode? Maybe you're pumped up and I'm glad to hear that. Well, if your situation is very straightforward, meaning that the account is 15 years or older, not the beneficiary, it's been the same beneficiary the whole 15 years, the account has been at the same 529 provider the whole time, and the beneficiary has enough earned income to make the contribution, then you should probably be safe to proceed with making this rollover. In those situations, there really isn't a gray area. But if you can't say yes to all these questions, then you really have to give it some time for the IRS to clarify some of these questions. Now, I wish I could tell you the IRS is in a rush and they're just waiting to answer this question, but they really aren't, and it could be a while before they are actually going to issue these answers. Now, the good news is that because we're in 2024, you have until April 15th of 2025 to process a IRA contribution for this year. So we have roughly about 13 months of time where we can wait for the IRS to give us some clarification. Hopefully it won't take that long, but once they do, it will answer these gray areas and it will be a lot easier for you to know if you can process one of these rollovers if you can't answer yes to those 4 questions that I asked earlier. So unfortunately, taxes and tax planning are never easy, and obviously this is a big instance of tax planning, and it's never as easy as it sounds, but I hope you found this helpful so at least you're knowledgeable about how to do this, and then if it makes sense or when the IRS releases their updated information about this, you can follow through. If you have a listener question and you'd like to have it considered for a future episode, head over to retirewithryan.com and click on Ask a Question. Have a great week, and I look forward to talking to you next Wednesday. Take care.